Hello everyone, my name is Kathy Lean, and I'm very excited to share with you our very first chapter of our cryptocurrency course. Over the next few chapters, you will hear from myself as well as my colleague Boris Schlotzberg. We're going to teach you about how cryptocurrencies work, some of the most important things to know about them, and unlike many courses out there, we're going to teach you 2 trading strategies and give you a MT4EA that you can use on some of the cryptocurrency brokerage platforms to start trading them immediately. So without further ado, I'd like to share with you this disclaimer that says trading Forex carries a high level of risk and may not be suitable for all investors. And if you're watching this video on demand, you can pause the screen, read through this disclaimer thoroughly before you move forward. And I should say that it's Forex as well as CFDs, as they are both popular ways to trade cryptocurrencies. So the first question to ask is, what is a cryptocurrency? What is this craze that we're hearing about? Well, the best way to explain a cryptocurrency is that it's kind of like digital gold. There's a limited amount, there's mining occurring, and it's not kind of contingent upon the state or economic outlook of any specific country or economy, which these days seem to be a very popular reason for many investors to look into alternative investments like cryptocurrency. So at the end of the day, the best way I think to describe a cryptocurrency is that it's digital gold. So why are digital currencies so popular? There are a number of reasons why digital currencies kind of came into fruition and then became popular and then are as popular as they are today. And these are just some of those reasons. First and foremost, people love the idea of freedom of payment. You don't have to worry about bank holidays, border controls, monetary limitations that some of these governments have. You are basically in control of your money in many ways. And I think people like that a lot, particularly the underworld, who tend to be the ones that have adopted cryptocurrencies more quickly than the general public. They like the freedom of payment, they like the anonymity, and they like the transparency. Because with all of these digital currencies, once you've moved them to your wallet, you can move them around without necessarily showing who you are. And at the same time, the information is relatively transparent because all the transactions are finalized, they're on the blockchain, and it's available for everyone to see. But people are only looking at the transactions and not your personal information. So I think that is one of the more attractive reasons why people like digital currencies. And at any point in time, people can always verify the transactions through the blockchains and things like that. There's no government oversight. That we talked about how in many countries there's restrictions on moving money around, or if you're conducting transactions that may not be so completely legal, I guess. Then not having the government oversight, I think, is viewed as a big advantage for investors. People also love the fact that there's big price movements. It's kind of like back in the day when we had the day trading era, where currencies and stocks were moving, tremendously on an intraday basis. You don't really have that as much these days, except for in these cryptocurrencies where you can have huge intraday price movements. And I think that volatility and the opportunity has made cryptocurrencies very popular. And people really like that that these cryptocurrencies are starting to get governmental adoption. And they like the idea of getting into these things before everyone else does, at the kind of very beginning stages. And the more governments who take steps to make Bitcoin legal, like for example, Japan has done so recently, the more popular these currencies become, because people like the idea of getting into them in their infancy. Just look at this price chart. This price chart single-handedly explains to you why people are so crazed about cryptocurrency. This is just one cryptocurrency, of course, the most popular cryptocurrency, Bitcoin. And you can see that over this 1 year period alone, Bitcoin went from $600 something to $4,800. That's a huge appreciation. And chances are this degree of appreciation won't continue, but the hope that this degree of appreciation can continue, or the previous path of this appreciation has made it an extremely, extremely attractive asset to traders and investors who are hoping that, if it can go from 600 to 4,700, then all they're hoping for is maybe for it to double to 8,000, and that would be good enough for them. It's just the hope for these big price movements to continue that has made it really attractive to a lot of new as well as quasi-seasoned cryptocurrency investors and traders. But cryptocurrencies and digital currencies have risks, and quite a bit of them. We actually have a whole chapter dedicated to this. So I'm just going to run through these on a very cursory level, and we'll discuss them in far more detail when you get to towards the end of the course. So the risks of digital currencies are, you have small market, and because it's a small market, there can be these exaggerated volatility. And it is this exaggerated volatility that's leading to these large price swings. It is unregulated. Some people like the fact that it's unregulated. In some ways, it's also a serious risk for digital currencies. The transactions are irreversible. Once it's done, you can't. It's not as if you wrote you wrote a bad check and you go to your bank and said, oops, can you please adjust that last zero or delete that last zero that I added onto my check. It's irreversible. It's vulnerable to hacks. There's been a lot of stories about that, and that's one of the most serious risks of digital currencies. They're not that easy to use. You've got to have multiple platforms in order to purchase and then move the currencies to your wallet. And even then, while you may be able to move it from one person's wallet to another, in terms of broader usability at any sort of retail locations or even online, it's not an option that is readily available. And also, some governments don't look at it so favorably. For example, China recently banned initial coin offerings, forcing the world's largest Bitcoin exchange, BTCC, to close its Chinese yuan Bitcoin trading platform. And so, while this is a specific scenario, because China is a country that's rife with scams and ICO scams that weren't regulated. Digital currencies and cryptocurrencies are very much vulnerable to the adoption or the rejection by certain governments. The most popular digital currency is, of course, Bitcoin. Invented almost 10 years ago on October 31st, 2008 by Satoshi Nakamoto. We're going to go into this in further detail, but this is hands down the most popular cryptocurrency and the most widely accepted, the most widely used. And it's kind of the benchmark of all cryptocurrencies. And we'll go into this in a lot further detail in the next chapter. But I think what's important to realize is that when it comes to cryptocurrencies, there's a whole process that needs to happen. That miners get involved in. That happens, behind the scenes that can affect, how quickly these cryptocurrencies move around. So to be more specific, the way cryptocurrencies work, is that basically, someone requests a transaction, and the transaction is then broadcasted to this peer-to-peer network. And these peer-to-peer networks are generally the basis of these cryptocurrencies that make them so quote-unquote fair, and make them kind of not within the parameters of these government regulations. So the transactions then broadcast to peer-to-peer networks consisting of computers known as nodes. Then there's a validation process, and then sometimes that can take some time. The network of nodes validates the transaction, the user status, and then a verified transaction, and only a verified transaction, basically involves a cryptocurrency, the contracts, records, and other information. Once it's verified, the transaction is combined with other transactions to create a block, and this new block is then added to the existing blockchain that in a way that's irreversible, it's permanent, and then the transaction is complete. This whole process can take anywhere from minutes to hours to days, depending upon the size of the transaction, how much you're willing to pay for this, and which cryptocurrency you want. And that's what makes it so challenging in some ways. The cryptocurrency is a medium of exchange created and stored electronically in the blockchain using encryption techniques to control the creation of monetary units and to verify the transfer of funds. And you can take a look at the bottom process where it has no real intrinsic value and that's not redeemable in another commodity, but it's something that can be used as a medium of exchange. So this whole complicated process is what happens behind the scenes of a cryptocurrency transaction, more specifically a Bitcoin transaction. And, as a user or as a trader who may be, or an investor who's just simply getting into this for the hope of, either appreciation, or with contract for differences, CFDs, you can buy and short the cryptocurrencies. You're just looking for these price movements, but depending upon how you engage in the cryptocurrency contract, it may be very difficult to start the transaction and have the same price be the price that you intended to be by the time that you have ended the transaction. Now, of course, using things like contract for differences, which most of our audience will be using this way to trade cryptocurrencies, that's a much more fluid way to get in and out of these cryptocurrencies without having all this time delay and things like that. On the complete opposite side of the pitch spectrum is the whole idea of mining. A lot of people like getting in from the ground up, and they like being able to get in from the ground up and like being able to mine for their cryptocurrencies, to mine for the Bitcoins. And there's a lot of software out there, some legitimate, some not legitimate, and giving you the ability to mine these cryptocurrencies. So what is this business of Bitcoin mining all about? Well, in traditional fiat money systems, governments print money, but in cryptocurrencies, money is not printed but discovered. Computers around the world work around the clock to mine for Bitcoins, and the mining of the Bitcoins basically is involved in the process of transaction validation. So basically, if you help to validate transactions, you're compensated by a fraction of your Bitcoin for the computational power that you've contributed to the whole process. And the more computing power you contribute, the more Bitcoins you can earn or mine. And some people, instead of trading Bitcoins or through CFDs or things like that, they get in through the mining process because there's a lot of information out there that kind of walks them through the whole mining process and offers them a cheap soft hardware option that allows them to get involved with mining. So the next obvious question to ask is, can I start mining? Because if I'm just adding my computing power and I'm just getting all this set up, usually it's just like $1,000 or $2,000 to buy into the software, and then can I start have my computer run and start mining for these Bitcoins? Well, technically anyone can mine Bitcoins, but you'll need to buy the hardware, which is generally, not that expensive. It's, maybe I would say somewhere between $1,500 to $2,500. But what can be very expensive is the cost of electricity that all of this consumes. And that's why, Bitcoin mining may not be that attractive. And only those with really high power machinery in countries with really low or free electricity costs can really make money for this. And, because there's so many people engaged in the whole mining business and more people are interested in it, the algorithm is constantly being adjusted. I mean, in the past, 50 Bitcoins were granted to any miner who created a block. In 2012, it was reduced to 25. In 2016, it was reduced to 12 and a half. And it is expected to be halved again in 2020. So you're getting a lot fewer Bitcoins for the same amount of electric power and computing power that you're contributing to this process. Now, of course, Bitcoins are worth a lot more, so that's something to keep in mind as well, but the prices are volatile. So if you are interested in mining for Bitcoins, there's a mining calculator published by buybitcoinworldwide.com that gives you a sense of whether you can truly profit from, mining Bitcoins. And, I've got a little calculator here. And I just want to put this into perspective, if you just give me 1 second. Okay, so, one of the rigs that you can use to mine Bitcoins is called the Antminer S9, which is a modern rig. It offers a good hash rate for its consumption and costs anywhere between $1,800 to $2,400. So generally speaking, the hash rate for that is 12,500. Oops, sorry. 12,500. And the Bitcoin price is 5,700. The power consumption is 1,225. And so this is the process that varies, cost per kilowatts per hour. In a country like China, the cost for kilowatt per hour is probably only about 5 cents. So, if you were in China and you did this Bitcoin mining, you could potentially make, $2,000 a year. Now, you had to pay, about that much for the first year of in your hardware, but, in the second, third, or fourth or fifth year, you may be able to make it back. Now, what happens if you're in China and the Bitcoin price drops 50%, which, could be possible? Then you only make $500 something a year, which, is still, I think pretty decent in many ways, for a lot of people. I think it was 5,100, but somewhere around there. No, I think it was, okay, we'll just leave Bitcoin price around there. In the U.S., however, the cost per kilowatt obviously depends upon, where you live. But for American hobby miner, the average power costs, is probably about 15 cents. And at 15 cents, at $5,200 in Bitcoin price, you're making only $59 a month or $700 a year. Now, you could say that $59 a month is $59 more than I had before. Of course, you put about $2,000 into this already. And so you need, a year and a half in order to return. But if the Bitcoin price drops by 50%, which it could, your profit turns into a loss. And so at some point, probably $3,300 or $3,400 is about $3,500 is where you're break even. If Bitcoin goes below $3,500, then you've lost money on your mining. And so this is something serious to take into consideration, because whether or not mining works for you, and you can kind of calculate it, and you can look at your own energy bill and what your kilowatts per hour are. Buybitcoin.com worldwide is a pretty reliable calculator to figure out whether you should even get into the whole idea of Bitcoin mining. There are, of course, risks to Bitcoin mining. That you could have hardware failure, a power outage, which could be pretty serious, network disconnections, the price could crash, there could be volatility. So mining itself, has, quite a bit of risk as well. And you really need an elevated Bitcoin price to make it profitable, because if Bitcoin does not continue to go higher, then the effort versus return that you're getting from this is going to be much lower. So with all of this in mind, how do you buy cryptocurrencies? We do have a whole chapter dedicated to this that will go in further detail. But there are online platforms such as Bitcoin wallets. The most popular ones like Coinbase, Blockchain, BitGo. I mean, these are some of the popular ones. You can also do it through digital currency CFDs, contract for differences. And this is offered by many kind of CFD and Forex brokers. Or if you want to buy Bitcoin or specifically through a exchange listed instrument, the Bitcoin Investor Trust is a fund that was created to buy Bitcoins. And so the advantage of this is you can buy this through your regular broker, and each share represents 1/10 of a Bitcoin. But of course, it comes with some steep costs. And we'll talk about all this in further detail. But that's the, kind of the basics of the digital money revolution, why it's so popular, what are some of the positives and negatives of cryptocurrencies, just kind of, walking you through the general premise of how these things work. In the next chapter, we'll talk about the most popular cryptocurrencies and what sets them apart.